Welcome to Tradespoon and Yellow Tunnel. My name is Vlad Karpel. I'm CEO and founder of Tradespoon, and today we have our weekly strategy roundtable where we talk about current market conditions and any questions you might have about your subscription. For those of you who are new, welcome. This is your first live event. Do me a favor and first, or welcome new subscribers. Disclosure is important. Please read the stock and options involve risk, not suitable for everyone. You must be aware of risk and be willing to sell in order to invest in market conditions. I'm not a registered with FIN or SEC. I'm showing you what I do on my own account based on the balance level for general education information purposes only. Please consult your financial advisor prior to making any trading decisions. Also, should not be assumed that the future trade picks will be profitable or will equal past performance, and you can see the relationship between Tradespoon and Trading Blog. All right. Before we jump into a trading plan, let's talk about current market conditions. Adobe had earnings, 15%. We'll talk about that shortly, but let's talk about, well, yield. I mean, top to bottom. My approach is top to bottom. Right? Macroeconomic conditions. Macro sets the stage. Interest rates and dollar is more important than GameStop and Nvidia, right? Different people have different approaches. Some people do bottom up and they just trade GameStop or Nvidia. They don't really care about macro, which is fine. But majority of the stocks are highly correlated to indexes, and they're highly correlated to the interest rates right now. And interest rates continue to drop. We actually had 4.2 handle, 4.19 handle, which extends basically long-term support levels. All right, you have to go back to 2024, right? We've been at this level many times. But it's still kind of descending triangle, right? This was a descending triangle, and we did break below that. So it's a pattern of lower highs, lower lows, right? On the better than expected CPI data, better than expected PPI data. At the same time, we are getting sentiment data, small businesses data, initial claims data, pointing to the economy is cooling off. Right, and potentially even the employment market is cooling off. So interest rates have significantly dropped, right? TLT is also breaking out. Right? So again, pattern of higher highs, higher lows, facing 95 is the first, but it broke this downtrend in the beginning of the year, right? Whether it's fear of recession or economy cooling, or whether it's geopolitical risk, right? France bonds, between French and German bonds are continue to expand. Even, French bonds are, I think higher than Portugal bonds, right? Give higher yield. So the uncertainty about the elections in Germany, in France, weighing, on the market. Right, even in the United States, because it's 25% of the S&P 500 companies' revenue is derived from Europe. So you can see kind of a sharp drop in Germany, right, on the election sphere, below the April level. And it's a 200-day moving average. So watch this level. We have a lot of indexes, right? On one hand, we have a stock like Nvidia that's breaking out. And Microsoft, right? But on the other hand, we do have interest-sensitive stocks like industrials are breaking below April lows, right? Which is not banks are breaking below or at May lows, but approaching April lows. You have transportation sector kind of falling apart, revisiting. I mean, it broke through April lows. It's actually at 2024 lows, right? May lows. So there's definitely not a broad-based rally, right? People always say, well, for healthy bull market, you have to have an expansion, right? Small caps, small caps broke through 50-day moving average, on its way to retest probably 200-day moving average and April lows, and same can be said about mid caps. So it's a narrow leadership, right? I think it's Fred's, favorite, or Bob's, I forgot, Bob's, I think, favorite in how many stocks are above 50-day moving average, only 40%. It's kind of dropping. We're not at April lows, but below 50-day moving average, below 200-day moving average. So it's trending lower on the key important level. But on the other hand, with the help of Broadcom, Adobe, Nvidia, Spiders is at all-time high. It's sitting at this kind of important gap, right? It's below the gap. It's at Thursday's low, but it's above the breakout level, right? We have seen positioning. Let's look at the positioning. Oh, sorry, before positioning, let's look at the Tradespoon. It's more important. Still strong uptrend. It shows 537 support, 545 overhead resistance. It's a pattern of higher highs and higher lows. If you zoom out to 6 months prediction, right, longer term prediction, we do see deterioration in the bull trend. Still a positive trend, still bullish trend, but not as strong as it was months or 2 months ago, right? But still shows that we could be trading at between 500 and 532, right? We already broke through that level. And we are already basically at the July and August highs. So market is overbought based on the long-term trends. It is overbought. It is prone to pull back. I mean, 500 maybe 10% pullback or 8% pullback is excessive, but 5% pullback I think is reasonable to expect that in the next couple of months we are trading at 520, between 520 and 555, right, on the just 2% higher. If you look at the spike positioning into June expiration next week, and then we have July and August expiration, highest positioning is short term for next Friday expiration is 545. So 545, I think market is going to have a hard time breaking through the 545 by next Friday. And then after that, right, if you remove them next Friday, then the biggest positioning, not a lot of positioning in terms of selling of the calls, 550. So I agree with the model, neural network model, right? Usually in trading, you want to have a handful of signals. You can't rely just on one signal, seasonality. There's no one signal that you can say, okay, 50-day moving average crosses to 100-day moving average. Okay, I'm in. You have to look at several, and usually you have a basket of them. My favorite, obviously, is neural networks that we've developed, because it's a good trend indicator and support and resistance indicator, and also dealer positioning, right? Dealer positioning is important because it shows you the skew, right? Right now there's a pretty large put skew. People are nervous, almost 0.85, 0.75, 0.7, anything above 0.50, meaning people are buying puts, right? You have, I don't think we had a 70,000 handle. So people are heavily defending 500 level, right? But before 500, 530. So it's reasonable to assume that your 530 and 550 is where the market is going to trade short term, right? 530, right? That's the breakout level, and then 550. So 10 points to the downside, 10 points to the upside. Those are your main key support level based on neural network position. Okay. So, so the bull case is that AI is here. Adobe, Broadcom, Nvidia, they're gonna push the market higher. That's the bull argument, right? And then, still healthy employment market, inflation is dropping, no signs of recession. Bulls are in a pattern of higher highs and higher lows, and bulls obviously have been in control for the past couple of years. Bear argument is that there's still distress in the commercial real estate, right? There's widening of the spread between treasury market and bond and the junk bonds. There's instability in interest rates in Europe, right? Japan, right? Japan is also, Bank of Japan said they're not gonna stimulate the yen. So I think last time I checked, Japan also has having a hard time stabilizing, right? So IDAJ, same thing. Japan is kind of fallen to 200-day moving average, and Europe in general, VGK, is falling below 50-day moving average. Any questions? So in terms of spiders, I think those, there's three scenarios, right? There's three scenarios. Scenario number one, bulls are in control and they're gonna stay in control. And, let's talk about, July earnings season, right? I assume earnings season, so before earnings season, scenario number one, we break through 550, right? That's scenario number one. Scenario number two, we trade between 550, the way dealer position and neural networks position, basically trade between 550 and 530, right? 530, the breakout level, right? That's scenario number two. And scenario number three, we break below 50-day moving average. We break above the breakout level in April, and we revisit. A lot of people think we're going to revisit April lows, right? Everything revisited April lows except mega cap and momentum's high large cap, mega cap momentum names. So scenario number three, right? So scenario number one, we break above 550. Scenario number two, we're stuck in the range. And scenario number three, well, not stuck, but we can go up 2%, we can go down 2%, or 3% up, 3% down. And then scenario number three, more meaningful pullback, revisiting April lows. All scenarios are possible. They're all going to be driven by Powell's speech and macroeconomic conditions and geopolitical risks. But as a trader, you need to decide how much money you're willing to risk during summer when liquidity is lower, right? But on the other hand, we are in an elections year, and usually June, July are strong months for elections year. So how many of you say one, we're going above 550? How many of you say two, we're staying between 550 and the breakout level, 525? It's called 525. And then how many of you say we're going to dip below 50-day moving average? Bob is in the house, as they say. All right, Bob is in the house. Kevin, just remember to all market maximizers. Kevin, thank you for your commentary from Zero Hedge. Nice Adobe trade, coach. Bob, yes, thank you. I hope you participated. Yes, Adobe was one of the better trades. Three. Oh, everybody's bearish. All right, what's going on? Dip 33333. Everybody except BJ is one. I'm gonna stay with two. Nobody said two. I'll stay with two. Basically on positioning, right? Based on position. But I do recognize if there's some kind of a catalyst, regional banks default, some widening of the bond market in the in Europe. It's not 2010, right? It's not Portugal, Ireland and Greece, right? It's not the same situation, but bottom line, the interest rates in are widening in France and Germany, and if Europe is falling apart, it's gonna at some point take United States with it, right? There's only so many good Adobe and Nvidia earnings, right? At some point, anything negative about AI, and then you have a catalyst. So all three scenarios are possible. I like scenario number two, but I do recognize that two is also possible, and also one, right? There is no black swan events. We'll probably get to 550. I don't think we're going to break through 550 by July expiration, but it is possible. Meanwhile, small cap very weak, right? They continue to deteriorate. They're breaking through June lows on its way to revisit April lows. Same thing can be said about regional banks. They're sitting at the 2024 lows, which is negative. Gold rally, silver up, Germany significantly down, Europe significantly down. Oil has been weak. It's breaking through the 200-day moving average, right? Demand, supply issues. The global economy is slowing down. China is not sure if it's recovering, and oil continues to deteriorate. Technologies holding on as usual. Mega cap, FCX, copper retraced to 2 standard deviation. China dipped below 50-day moving average, right? We talked about this support level. Bitcoin is not breaking out, right? That's always been my, a lot of people, usually Bitcoin breaks out and then spiders follows. Right now, Bitcoin hasn't done much since March, right? But technology and spiders continue. So that's an area of concern. NVIDIA is obviously up every single day without exceptions. And crude oil is also weak, below 50-day moving average, below 200-day moving average. Actually, almost 70 handle. All right, so that's microeconomic condition. There's information for the bulls, right? There's data to support bull case. There's data to support bear case. But meanwhile, we need to trade. So I encourage you to go through these rehearsal exercises, right? Scenario 1, scenario number 2, scenario number 3, so you know how much to risk, right? In general, on all of these, not all, but most of our screens, it basically you can expand, and it tells you, especially if you knew no more than 4 active positions, 2.5% account value per position. We have multiple sources. Sometimes I have more positions. If you experienced trader, you can have more positions. But if you knew, start with 4 positions, 2.5%. We have some volatility guide, volatility rules video to how to deal with risk management and volatility. So that's risk management is very important. How do we help in Tradespoon? We have different services, right? So it's broken down in maybe 2 buckets, right? We have tools and picks, right? If you know what you're doing, you're a disciplined trader, you're a confident trader, you just need signals, right? You need tools. So Black Forecast Toolbox is obviously one of my favorite tools. It shows you the trend, support, and resistance. And for the trader, that's all they need, right? Trading is, yesterday I had a webinar on distribution of outcomes, right? We have that actually here, event recordings. Encourage you if you never saw it, all right? Active Investor Workshop. Yeah, so it's older webinar, but it hasn't changed, right? So return on capital, probability of success, and estimated move, right? This is the foundation of successful trading, right? That trading is about probabilities and probability of a certain outcome, right? And then the distribution of these outcomes, and then you look at how people are positioned, what they're thinking, right? Going back to game theory, right? Important to think what other people think, and you decide whether you want to be long, short, etc. So stock forecast toolbox, right? Support, resistance, trend analysis. Active trader, I use it quite often, right? To kind of see which sectors are trending higher or lower. Today there was not a lot. Constellation brand, consumer mass, right? So if you do, not the most liquid names. So again, I'm a little concerned, but some people don't care whether it's liquid or not, right? And if STZ is breaking out, then they are willing to invest. It does look like STZ is trending. Trying to break out, right? It's trying to break out through this level. Mass actually looks like it did break out and keep support. But these are examples of stocks that, short-term have momentum, right? And you can, we give you suggested entry and exit prices. And here we're looking for 1% gain, right? If you long-term and you want to have constellation brands, you think it's breaking out, then you can use, wait more than 1 or 2 days and use wider bid-and-ask spreads. A is basically shows you, look at the futures data. You look at the futures data, and if you see that the futures are significantly lower, then you probably want to wait for predicted low. Otherwise, use the yesterday's close, right? You can use yesterday's close or predicted low. So that's active trader, right? Same thing with weekly trader, monthly trader, similar models, right? But just analyzing different time intervals, right? You need to decide, are you a short-term trader, medium-term trader, or are you a long-term trader, right? Then you analyze different amounts of data. Same with models, right? ANF, right? Abercrombie and Fitch was one of the bullish ideas, Netflix, XLI. So you definitely gives you predicted support, predicted resistance. Didn't realize Netflix is up. Or look at Netflix. Got out of it early, but Netflix is breakout, right? So Netflix, it was a good example, kind of on the other weekly trader where you do see momentum behind the name, and it's actually outperforming the entire market today. So that's an example of Netflix, right? And weekly trader, right? But notice on the weekly trader, you're looking for 2% gain, right? 2.5% gain. On monthly trader, you're looking 5%. So that means that if you hold in position longer, then you need to reduce your position size, right? You can't trade the same number of shares if you day trading versus long-term trading, right? Because the fluctuations. Look at the VIX, right? If VIX is low, 12, 13, stocks are not going to move. Every S&P 500 stock is not going to move more than 1%, like 0.5%, 1%. If VIX is at 20, then 30, then it will move 2% a day, right? So that's something to keep in mind in terms of volatility and expectations, how much the stock can move, right? And usually you find this, right? You can follow in a live trading room environment. I usually look for 0.5% to 1% gain on these short-term trades. On the longer-term trades, somewhere between 2 and 5%. So that would be the proposal of how you would use active trader, weekly trader, monthly trader. We talked about stock forecast toolbox for short-term, long-term trend analysis and support resistance. And obviously you have seasonal charts that help you look at the seasonality, right? Usually in June, sell and go away, right? We have elections year. If you plot, this is all years. If you plot just election years, you'll actually see the opposite. So that's something to keep in mind as well. What else? And probability, right? It's all about probability. So we do have probability calculator, right? Based on probabilities and surprise, surprise, historical volatility 555 overhead resistance, 530 is your support. Actually, this this is a historical vol. So based on historical volatility from 50 days standard deviation, one standard deviation, 530 your support, 555 for the next 50 days. So your historical data, right, show historical volatility positioning, neural net says unless you have some kind of an event, 530 is your support, 555 is your overhead resistance. If it breaks out above 555 or breaks below 530, then there's some kind of a catalyst in the market that moves the market higher or lower from these expectations. Summer doldrums will kick in. All right, big Netflix breakout today. Thank you, Bob. Yeah, great mind thinks alike. Good. Trend for the time being. UL. Thank you for sharing. Let's look at UL. Yeah, UL is a strong Unilever, strong care, consumer staples, very strong. Thank you for sharing, for sure. Adobe, yes. So Adobe was, so then, okay, so let's go through other examples. So if you watch the recording from yesterday, right? If you watch the recording from yesterday, when we look at Adobe, highest interest, right, in terms of we're going back to game theory, where everybody's, not everybody, but option traders, where option traders are thinking, the highest position was at 530 level, right, at this strike. This is the new one. But yesterday, if you aggregate, 530 was the highest strike, right? 530 was the highest strike. It changed from yesterday, but yesterday the was at 530 and 390, right? 530 and 390 were the picks. Based on estimated move analysis, which you can view here, right? Based on implied volatility, estimated move analysis, I decided to do iron condor, right? So these are the services, right? You have a lead trading service where I trade everything, earnings, stock, options. And then you have premium service where I only trade option spreads, one trade idea a week. And then you have shadow service where you see all of my trades, right? Spread trader, you only see spread trades. But elite circle is where you see all my trades. I trade stock, options, option spreads. Some strategies are more complicated than the others, right? This is an example of a butterfly where I bought 515, 530, 545 butterfly, right? 1 by 2 by 1. One call, 2 530 calls, and 1 545 calls. I bought it for 70 cents, so I spent $1.40 and I closed it for $5, right? 300% return, more than 300, over 300% return overnight. So these are obviously, you know, trading about, again, probabilities of success, right? There's no such thing as that you're going to make 300% every trade, right? That if you think that exists, probably not. But you know, you look at return on capital. This is very high return on capital. Probability of success is lower unless you can look at certain patterns, certain signatures, certain things, and recognize that during this time, those probabilities are elevated, right? So going back to, I mean, I like his book Anti-Fragile, or you know, Black Swan, but he talks, you know, Nassim Taleb talks a lot about this concept of bell-shaped barbell approach, right? Barbell approach. It's not just Taleb. I mean, barbell investing is not. I don't think he invented this. So barbells. The idea is that, you know, most of your money is conservative, but you have a certain amount of money in these aggressive trading, right? Where you are looking for 300% return overnight, where you recognize certain patterns and that the probability of these outcomes are elevated. They're not 100%, they're not 80%, they're smaller, but they do exist, right? So that's an example where this week we had Oracle, we had Adobe, you know, I talked about Broadcom, all three moved to standard deviation in 1 week, right? From probability, very unlikely event, but since they're all participating in the same, you know, theme of AI, and looking at positioning, you can see that these events are not only can do, but you happen, but you actually see that right now it's sitting at, you know, right at 530 level, right? The average price is actually 530. We were at 534, we were at 525, 4, and you know, just like Oracle, where's Oracle? Is it still at 140? Yeah, just like Oracle, it's kind of stuck at this 140 level. It's not stuck, but you know, this positioning does create certain kind of line of defense where bulls and bears have to fight it, right? Dealers have to be delta neutral, you know, retail investors have to defend their positions. So this is where, at least for a certain amount of time, it stays at these levels. My previous economic was bullish. Thank you, Kevin. CLF. I think Nucor was in the news today, but CLF looks pretty weak to me, so I'm not sure how it looks like it's breaking down, not breaking out. And same thing with Nucor. So again, economy is slowing down, steel stocks are in free fall, right? That's usually a sign of, you know, weak economic activity. Chuck, weekly and monthly bull. So the one that I actually trade under premium portfolio, this is where you actually see spreads that I trade. Monthly and weekly are trade ideas, so you can find them under weekly and monthly trader. And the idea is that I propose to trade stock or options, single options, like let's say Netflix. I would propose to just trade weekly call, but you can do call spread, right? You can do monthly call spread. I mean, these are the signals that you decide on a strategy, right? I was talking about yesterday about doing potentially account on, Adobe. One strategy was to do a spread, right? Butterfly, right? Two spreads. So let's just review that image of profit and loss for butterfly. So it looks like this, right? So as long as it stays at that 130 strike price, in theory, I mean, I closed at $4 because I'm doing webinar and I can't really watch the trade, but right now it's at $12. Right? So this is, kind of, if you have time to watch, then and it's staying at that price, then you can have, better returns. Actually, I don't know if it's the right quote. I think it's trading at $7 right now, $7. It's a delayed quote, so maybe a little bit higher, but $7. Any questions? Thank you, Chuck. All right, so that's a lead service. And I don't trade only options. I'm long Microsoft, right? I bought Microsoft because of the signal, right? Oracle signal. I've seen NVIDIA signal. So I look at the mega cap and I think, okay, NVIDIA is very volatile, but Microsoft is breaking out. It holds, it's doing better than, you have a clean breakout, right? So I think it's a pattern of higher highs and higher lows, right? So example of stock, option trades, option spread trades is all, you can find it all in the lead circle. We do have a YouTube channel that I encourage you to participate. We're broadcasting on YouTube. Every Wednesday we have a morning bell and closing bell. Hit subscribe button. I know I unsubscribe. But if you find some videos that are helpful, please like them. Hit on the like button. What else? We do have a blog, market newsletter. So we publish a blog every week. So please read that. Add info@tradespoon.com so you get it in your inbox. And we have a lot of free education, right? Getting started guides, learning center if you want to learn about technical analysis, options basics, advanced technical analysis. This is all available. We have a big library. We've been doing this for over 10 years. So there's a large library of these workshops and webinars that I also encourage you to review. Any questions? Anyone is new? I'm not sure if anyone, if this is the first time, just say, you put on NVIDIA for monthly income. NVIDIA, let's look at NVIDIA, right? So I would look, the question is if you do a put spread or cash secured put, right, in NVIDIA, you do monthly income. Usually people do like option ladder, right? You sell put, if you assign, you get stock, you sell call, right? And then you repeat. So very popular strategy. You have to have a larger account, obviously. But now, NVIDIA is a lot more affordable at $100,000, at $1,000. So I would look at the chain first and look at the So let's look at NVIDIA. All right, so July 19th. Let's try to. Yeah, unfortunately, they still haven't fixed the strike NVIDIA. They don't handle the splits correctly, but let's see. Zoom in. Yeah, okay, but we can just, I guess, look at it manually. So let's say right now we're in June, right? So you would look at July, right? July or August. You type in NVIDIA. So let's first look at what the model says. We actually can process the split now, yeah. So 6 months prediction. So still strong uptrend, obviously. Trading it. What is NVIDIA trading at? $130, right? So it's trading at 130. You know, basically ahead of itself. You know, model basically says by trend it should be at 130. You know, maybe September, August, but it's already at 130. Long-term prediction. So long-term prediction still a strong uptrend for the next 10 days. 132, 122. It's already, you know, it's close to the 132. In terms of positioning, right? Let's look at NVIDIA. Let's go into July, right? July 19. So it's trading at 130 level. So I would do estimated move analysis. So money straddle, right? Going back to that video. 7 plus 8, 15. 15 plus 6 is 21. 21 plus 7 is 21 plus 7, 28. So that's roughly $30. So the move is that it will move by $30. And let's look at the position. $30 on the upside. Yeah, so 156, 160, probably the largest position, right? 9,000, 10,000, 3,000. So there's a lot of position at 160, implying that between now and July, it will move another, 20%. Right? You don't have that as much positioning. Oh, actually 150. 150, a lot more position. So 2 standard deviation, that would be, $20. 1 standard deviation would be probably 150, right? So $20, right? We can actually look at it. Oh yeah, I don't have that. That hasn't fixed. Maybe it is. Hold on a second. Yeah, so 114 by 144, right? 114 by 144. So not a lot, but you know, the largest position is in 150, right? That's the biggest spike, 150. Implying $20 move, that's probably closer to one standard deviation. So 150 on the downside, okay, let's see high positioning at 120. So you have 120, I mean, you have 115, pretty large positioning. So I think $20, I mean, $20 is reasonable, right? That's, you have a lot of positioning, 28,000. So I would do 120, right? That's $11, 10%. Maybe if you want to be a little bit more conservative, maybe, what is $20 implied volatility? $30 is implied volatility. So that's 100. That's, you're not getting enough premium. So on a stock like NVIDIA, I think the highest positioning right now in July, either 120 or 116, right? But here it's kind of combination. So I would go to 116. So it depends how conservative you are. You get 1% return a month on NVIDIA. I mean, NVIDIA probably want a little bit more. So if you want to, if you assume that this level doesn't break, then you can do 120 and get 2% return, 2.5% in 1 month. So 120 put, right? 120 put. Let's see, NVIDIA 120 put would be the support level, which makes sense, right? You have these two, one gap, second gap, third gap. So as long as it stays below this gap, above this gap, it's a pattern of higher highs and higher. So that would be my, look at the estimated move analysis and then look at the positioning. It doesn't matter what I think. I know that there are a lot of people, you know, fighting for the 120 level, and same thing as 115, 116 level, right? There's positioning, right? You know, calls and puts. Any other questions? How's Adobe? Adobe is kind of sitting and waiting at 525 level. Interesting. All right. Any questions? Market closed Wednesday, Juneteenth. Let's verify this market. I believe that you are right. I think this is for the past couple of years the new holiday, and I think markets are observing. Yeah, Juneteenth, National Independence Day. Okay. So Wednesday, yes, Wednesday we are closed. That's actually good. Thank you for letting me know, Bob. What's Google range? There is a divergence between yield and the dollar. Good observation. I like it. Yes. Biggest explanation that I found is the scary trade. It used to be with Japan, but now it's with United States and France and Germany, right? Because people are concerned about Europe. They're demanding higher yield, right? They're demanding higher yield in Europe, and the safe haven is, in the United States. So I think that's one of the issues, right? That people are selling. I think, obviously euro is fallen, precipitously fallen on the news on geopolitical risk. It's very highly correlated, and so has the markets, right? Europe was at all-time high, right? Kind of patterns of higher highs and higher lows, and I don't know if it broke out. Let's do this weekly. But from 2020, October of 23, we're right at that support level. So I would watch VJK. I mean, it could be overblown, right? It's not Italy, it's not Greece, but people are concerned in the summer. So I would watch this level, right? But that's one explanation. Probably the most logical explanation is why dollar rallied, even though interest rates are falling apart. They kind of were moving together for quite some time. Now, not so much, right? You do have a pretty sharp drop, and I would watch 420 level. 420, it's, 420, right? Same thing. This is 430, the highs, but the weeks were closed at 420. So 420, that's been overhead resistance here, overhead resistance here. So I would watch 420. I probably would say if we drop below 420, then we could be heading to the 2024 lows, right? Why, right? If Fed only penciled in one rate cut, why would 10-year be at 3.80? Well, because here everybody thought it's rate cuts, right? Because inflation is going to fall apart. Now we're kind of in the same situation, but it's probably because we're going to have 6 rate cuts. But because we might have rates, but because of geopolitical risk or instability or something. But it is a pretty significant pullback, and I would watch 420 level on the 10-year yield. Excellent observation, BJ. Google range. Let's see. Google doesn't have a split, so it should be easier. Same idea, right? You want to look at the position. Position gives you distribution of possible outcomes. 1 standard deviation, there is no new information. 2 standard deviation, something happens. Earnings, Macron, quits or something along those lines. So right now, a lot of calendar spreads. Highest position on Google is at going into July expiration is at 190. So it looks like 190 to 200. You have a pretty large position in $14. So maybe 6 to 7% move into the going into the earnings, right, or beyond, right? This is July 19, August 16. So I think it could move 6 to 7% Google on the upside. On the downside, very high position at 170. Well, that's very close. 170, we could be there very close. So 160. But even 170 is pretty well positioned. This is June expiration. So June will expire. So let's remove June. Let's assume by next week nothing happens. All right. So then you have June 19. And the highest position is 160. Right. So after Friday, it's probably not, by next Friday, it's probably not going to drop below 170. That's just 1 week out, right? But by July, the highest position should be well supported, 160. So how much can you get for 160 Google spread? the Google option. Same question, Chuck likes to do, when you have larger account, then, one of the popular strategy is option wheel. You sell put, get a sign, sell calls. As long as Google doesn't lose its market share to Apple on the search revenue, then you should be good. Nobody will know that anytime shortly, but we'll see. But anyway, what did I say? 160. 160. What does the magic one say? Google, 6 months. Okay, 160. I like it. I'm more and more comfortable with 160 level. July, I get 50 cents. I'm not sure if I'm super excited about that. I can go to August. A little bit more, $2. So I would go to August and get 1.5%. I mean, 1.5% in August, 2 months. You do it every 2 months, 12, 13%. Yeah, 160 is well positioned. I mean, if you look at technical analysis, the gap, 165 maybe 165. If you want to get another $1, that's fine. But open interest, high open interest is happen to be at 160. Right? This is where people are gonna probably, bulls and bears gonna meet if there is a negative event. Right? This is only if there's a negative event. And the Adobe is staying at 526 level. Okay. Adobe is trading at $8. If I waited, could have closed it for $8. But again, I don't want to risk because I'm doing the webinar, but this is a good example where time decay, right? The time decay of the 130 calls, right? 120 calls, there's no extrinsic value, right? It's all intrinsic value. Right, so the 530. So 530 call, it's all extrinsic value. 515 is all intrinsic value. So as time is ticking, and this webinar, took an hour, stock didn't move anywhere, but another, what is it? $2, right? Another $2, $3, another $3 of premium, right? In just 1 hour. In just 1 hour, $3 premium. If you wait till the end and it stays at this level, and then it's a $15, right? Assuming it stays at 530. Okay. Google example. For retirement monthly income, again, this is just distribution of outcomes, and I'm very risk averse, right? So if I sell 160 put, that doesn't mean it can go to 150. You're giving up $1 of your profit, so maybe $1. So I would at least sell 160, 140. Yes, I'm giving up 40 cents of my monthly income, but if it drops to 160, 150, I'm not going to lose sleep. I have time to watch, right? If it drops to 160, and instead of $2, it's $10, right? And now you lost $8 of your monthly income. You might want to exit out only to know that it will reverse back up. So for that reason, I'm willing to give up maybe a little bit, not a little bit, 40 cents of $2, that's 25% of the profits. But at least I know that, if Macron quits and, a couple of regional banks default tomorrow, I'm not going to lose my sleep over it. All right, you guys have been awesome. Thank you very much. I really appreciate the opportunity, the fact that you guys are here. We will have a closing bell at 2 p.m. Chicago, 3 p.m. New York time. I will see you Monday morning, and thank you for participation. It really means to me, and I'll see you guys soon. Thank you, BJ. Thank you. Chuck, Joseph, BJ. Thank you very much. Take care, guys. Oh, do me a favor before you guys adjourn. Trustpilot for Tradespoon. Somebody, Carol left it for Yellow Tunnel, and I appreciate it. But Tradespoon, we also haven't had any reviews. So you guys are here. You guys are here almost every day. I know a lot of you did leave the review. If you left the review, then obviously thank you. Don't. But if you do have time, you didn't leave review for Tradespoon, do me a favor, please leave a review in English. Martin, I know you left the review, but it didn't stay. So just leave a review for Tradespoon. Positive, hopefully positive. If it's negative, just send me the email and let me know why it's negative. But if you're benefiting from these webinars, just say hi and add it. Thank you very much. Appreciate it. I put it in the chat box. Thanks, everyone. Take care. Have a great weekend.